Welcome to the fourth Q&A session. Today is 9th January 2024. I am Pratap here. So there are several questions you already posted. I'm sorry for the delay in answering your questions. So I decided to answer all your questions, nearly 11 questions identified, which you have posted in the recent time. The first question is about NIFTY chart. That is yesterday, in our analysis discussion, we discussed about NIFTY's newly created supply zone. So this is the one. So, but the question is, in today's NIFTY chart, don't you think we already have a supply zone? And today we got a rejection from that supply zone. A rejection from that supply zone. Observe your word carefully. Just note this point. The reason is, I would like to give you some clarity. That's why focus on this exact point, rejection. So what is thinking? From this supply zone, whatever the price action happened yesterday, that is a rejection from that supply zone. Okay. So what is your understanding? You have a Legin candle and you have two base candles, and then you have a Legout candle, not great, but there is a follow through candle. So that is the way you want to draw the zone. If that is the case, your zone will be like this. Isn't it? Okay. But I am not considering this as a zone. The reason is, we have a valid leg candle. Even the next one is also a leg candle. So you may consider this as a Legin and these two base candles, and you are considering this as a drop candle. Because this drop candle is not great, there is a follow through candle. First of all, I am not considering this as a drop candle. To consider this as a follow through candle. To consider the drop candle, the minimum requirements are not met in this candle. At least it should be better than the medium size candle. Is it better than the medium size candle? No. That is point number one. When it is not better than the medium size candle, it is not qualified as a Legout candle. Once if it is qualified as a Legout candle, but is it really a Legout candle? For that, the criteria is it should have a good considerable body. If it is not having good considerable body, at least the next candle is supporting that. That we will consider. But step one itself is failed. This is looking like a medium sized candle or even little less than the medium sized candle compared to the other things. Or maybe it is exactly looking like a medium sized candle. See the body. It is less than 50% of the body. And this body is also part of this entire zone. There are so many other reasons for not considering this. And moreover, considering this approach, which approach? A Legout, not a good Legout, but there is a follow through candle. That approach and daily and above time frames is quite dangerous. I am not saying we cannot use, we can use, but very rare special scenarios. This is quite dangerous. Even if I consider all your, whatever you said, everything if I want to consider. Why we consider all these things? Generally when we want to fine tune something, in that approach generally you go for this adapt. you may find, okay, this is not really great. We don't want to reject the fine tuning of our zone. That's why we use this approach. Which one? Whether is there any at least some kind of OK related leg out candle and then a follow through candle. So that in this area I can fine tune my zone. In that purposes only mostly you will compromise about your leg out candle when you fine tune your zone. Not for identifying the zone. This is the point you have to understand. Maybe wrongly you guys understood this concept. I don't know how many of you, because you already raised this question, means maybe some of other people also might have got, some other people also got similar kind of doubt, but they might not have asked the question. So that's why, keeping this point in my mind, I am answering. If you are thinking in this approach, you can draw any zone like this. That is a very dangerous concept. Mostly I use this kind of concept, identifying the zone only while fine tuning the zones. But here we are not fine tuning the zone, we are trying to identify the main zone. See, even if you want to fine tune, see the structure of the 75 minutes, very bad structure. See the 75-minute structure here? Did you find any lower time frame zones? No. It looks like you have a Legin candle, base candles, and again a Legout candle that way. Of course, this is not a great Legout. I'm just telling you that kind of approach is there. But here leg candle, leg candle, leg candle. Where is the zone here? Supply zone. Did you find a supply zone here? No. So that means we identified a zone, inside there is no supply zone. First of all, why you identified this zone? Generally, we go for this approach while fine tuning the zones. We go for this approach, a Legout candle, which is not a Legout at all, but we compromised, and next candle, follow through candle, combined both together, and we are assuming, okay, this is a Legout. When you go for that kind of approach while fine tuning the zones, in normal way, identifying the zones is quite dangerous, because it is not really a valid zone, strictly speaking. This is not alone. Independently, we should have a strong leg out. Once you identify a zone, so many things comes into the picture. What are so many things? Zone achievements, trend calculations, all these things are depending on the zone. If you compromise and draw a zone, it will affect all the statistics of your chart. That's why you should be very careful. Use this approach only when you try to fine tune the zone. Why you want to fine tune the zone? To minimize the risk, that is one point. To identify a good order flow at the lower time frames. There could be a possibility in such kind of situations. So that's why don't go for this kind of approach. This is not at all a valid zone at all. That's why I didn't talk about this concept, this zone previously. Do this kind of approach only when you are fine tuning, not drawing your actual zones. Hope I gave you the clarity. And the second important point, previously I told you, rejection. You are thinking about the rejections point of view. But before looking into the rejections point of view, see here what happened. We have a nice rally candle here with hidden body. Yesterday we discussed in our analysis discussion. So we have a Legin. After that we have a base candle and then we have a drop. When you have a Legin, base and drop, how do you think about the rejections related things? When you get a base candle, if there is an order flow here, see, almost the height of this candle and this height of this candle, high of this candle, very close. With small difference is there, but they're very close. From where the rejections will come? To get the rejection, there should be a lower time frame zone, right? The real order flow. Where is the real order flow in this area? Excuse me. So where is the real order flow in this area? So that is the reason why you should understand this is not the rejection. This is a new zone creation. How good this zone, how strong this zone, that is a different story. But is it a valid zone as per our demand and supply zone? I clearly explained. I don't know how many of you really understood the essence of the supply and demand zone price action. I clearly explained in our training video, lesson 2. I still feel lesson 2 is the best video among all the training videos I explained so far. I give that much importance to lesson 2. But how well you understood that essence that I explained in lesson 2? It is a question mark to me. How well you understood. But how well I explained at my best level. Institutional, clues, the clues institutions are providing. That is depending on the base candle. What is a base candle? Indicates here. There is a huge fight between two institutions. That means a demand and supply. When there is equal demand and supply. Why there is equal demand and supply? The fight between bulls and bears are taking place. Bulls are keep on buying and bears are keep on selling. And it is equal. The demand and supply is equal. That's why in a narrow range, the prices are moving. That is what I explained clearly in the lesson 2. And all of a sudden, what happened here? The supply dominated the demand. Why? Because an institutional participation. Which institution? Maybe the institutions fighting here, or again they participated with again a new order flow. That could be, or maybe some other institution came and they added a new order flow. That is a different question. What is happening internally? But all of a sudden, a huge institutional participation with sell order. And this sell order, what happened? It consumed all these pending buy orders and then pushed the prices down. This is the point you have to understand clearly. Why it took place? Because already imbalance is taking place. The balanced one is changed to the imbalance now. What is balance? Equal demand and supply. What is imbalance? The demand is gone and completely the supply is dominated. That caused this imbalance. Because of the imbalance, prices are moving down. When clearly such activity we have seen in this case, we cannot call this as a rejection. We have to call this as a zone. It is a zone. Assume this is a valid zone. And we have one more zone. This is LOTL concept then. It is not the rejection. LOTL, level on the top of the level. So rejection you have to understand completely in a different way. That is an individual candle specific. But here multiple candles are participating in this action. What is multiple candles? One is a Legin candle, another one is a base candle, another one is again a drop candle, that is a Legout candle. When all these things are involved, you cannot call this as a rejection. Assume in this candle itself, in this Legin candle itself, prices went into this area and then came down. That is a rejection. Or if not, the next candle, prices went and came down. Then you can call it as a rejection. But when you have a Legin candle, you have a base candle, and you have again a drop candle, it is a supply zone. It is a zone concept. It is not the rejection concept. See here, what you are seeing in today's candle here. Small rejection, okay. This is a rejection. Something is reject, a small. Why there is a rejection? Somewhere in this area there is a zone is there. I'll show you. That's why we have seen this rejection. Hope you got the clarity why I didn't consider this as this at all as zone. The reason is the price structure itself is not at all convincing me to consider this as a zone. That is one thing. And second thing is generally we use such kind of techniques. If it is not really a leg out, but some kind of consideration, favor, I mean some kind of consideration I am giving. That I do only at the time of fine tuning the zones. Why we are fine tuning? To minimize the risk. Anyway, in this in our second phase of our training, probably the last but one lesson is going to be the risk management. At the time we will be discussing these points only. And again, the third reason is the structure within this area at the lower time frames is not at all a convincing structure, the 75 minutes itself. With all these reasons, I didn't consider this as a leg out candle, and because it is not a leg out candle, this is not a zone at all. But here directly it is qualified as per daily time frame. We have a clear Legin candle, we have a base candle, we have a drop candle. Inside structure, is it good or bad? That is a different story. First of all, it is qualified as a daily zone. Okay, how good this structure? For that, you go to 75 minutes time frame, look into this. The structure is not at all good because we haven't seen any base candles. This is a leg candle. This is also a leg candle, ERC candle. This is also a leg candle. So we haven't seen any base candles. If that is the case, what happens to this zone? Maybe this zone will be easily, it will be broken. That is a different story. But inside here, something you can experience within this area. When you have two leg candles, previously once I told you. This is the way you can draw a zone. Another way of supply demand zone concept. Between two leg candles, the high of the leg candle and the low of the leg candle. So definitely you may find some zone at the lower time frame. So that's why within this area, you try to explore the 15 minutes area. So within this area, 15 minutes area, what is that you are seeing now? We have a drop candle, base candle 1, 2, 3, 4 and a drop candle. That way you can draw a zone like this, 15 minutes zone. This is one thing you can do. Or other thing what you can do, this is a leg candle, this is a leg candle. Between the wicks, again you draw a zone. That means the order flow is taking. See here, prices went and from there came. That means there is a real order flow in this area. There is a real order flow in this area. Because prices, this is rejection means see here, this is the rejection. Prices went and pushed the prices down. Huge rejection. Can't we draw a zone here? Yes, we can draw a zone here. But what exactly the meaning of rejection I am saying? You can consider like 1, 2, 3, 4 base candles and then a drop candle. Here we are trying to find the actual order flow. We are doing this exercise. Somewhere within this area there is order flow. So that means this is 15 minutes. Somewhere in 5 minutes or below, you may find an order flow within this area. So now go to the 5 minutes time frame within this area. Have you seen any zone? No, we didn't see any zone. But still you may find an order flow here because we have a leg candle, we have another leg candle within this area between these two leg candles. From high and low. That means within this area you may find a zone. That is If you go to 1 minute, this is a leg candle, this is a leg candle, high of this leg candle, low of this leg candle, we draw a zone. This is as per another demand and supply zone theory point of view. And as per the theory and combining with our theory, what you see, mostly one time frame below, you will find the actual demand and supply zone as per our theory. So within this area, at this level, you may find one more time frame below. From 5 minutes, what is one more time frame below? That is 1 minute time frame. So go to the 1 minute time frame and explore within this drawn area at 1 minute time frame. See, here you have a zone. You have a drop, 1, 2, 3 base candles and a drop. Now you draw a zone like this. This is as per our theory. And the real order flow is there in this area. This is the area the real order flow. But this is a 1 minute order flow. How strong it is going to be, we don't know. But it is 1 minute level. This is the only one area have the actual real order flow. That's why previously prices already went. Almost more than half of this zone is already completed, and from there see the prices. There is a very good move. It's not like 3 or 4 candles came down. There is a very good push down from here. So it is a considerable push from 1 minute point of view. See, after that prices went, further went up to this point. Now again today, prices went into this area. See, prices reached further. See, previously this is the area. Now today, let me draw a horizontal line to get the clarity. At today's high, let me draw. See, previously from where the orders were, prices were pushed from this blue color area. And today also, prices pushed exactly after reaching that area. Maybe just a point, 1 point above or 2 points above, nothing much. See how it pushed. That means the real pending order flow is there in this area. The real order flow. If multiple times, if it is coming like this, at least we can confirm this is a high liquidity zone. If multiple times is not the criteria always, there are so many other rules are there. The volatility conditions, so many things, complicated things. See the push from here. At what time it reached? 12:38. And after that, and now at 14, still we are in the live market at 3 o'clock 1 minute. How many points came down from here to? And what is the value here? 21,724. Now 21,564. So how many points are down? Nearly 150 points, 160 points. So close to 150 or 160 points is down from this point. Within, this is at 12:40. So within 2 hours period or 2.5 hours time period. So hope you clearly understand how exactly we are identifying the zone. So every time we should not compromise and draw the zone. Actually, it is not a considerable Legout. Still, we are considering giving some benefit of doubt and drawing the zone. Sometimes. That is a kind of compromise. So what I am trying to say, you should not compromise like that every time and draw the zone. If you draw like that, it leads to a lot of wrong analysis. Your overall analysis itself is going to be wrong. That's why I decided to explain this entire thing. That's why I moved this your question into the Q&A session. because a lot of explanation I have to give it to you. When generally we compromise, when we have high liquidity zones, we want to fine tune, we want to find the real origin of the order flow in that particular high liquidity zone. At the time, at one of the lower time frames, if the zone is not very clear, at the time we compromise and draw the zone, and we will try to explore if there is any real pending order flow or origin is available. For that point of view, we are compromising and drawing the zones in some times. But identifying your main zones, if you compromise and if you draw, that leads to a lot of wrong analysis. Don't do that. Use this technique only when you are fine tuning the zones. Don't use the technique for identifying the main zones. Hope you got the clarity. So this is about, and you may ask a question, what about this zone? Is it a strong zone? We don't know this is a strong zone, but there is some order flow, 1 minute order flow we identified. 1 minute order flow that doesn't hold the zone for a long period. Maybe next attempt, easily this zone will be violated. That point. Why we are saying? Because the 75-minute structure itself is not good within this newly created zone. But we identified a order flow inside this zone. But how strong this order flow is, we never know. Who knows? This 1 minute zone could be a high liquidity zone. If that is the case, institutions keep on adding the new orders into this 1 minute area. That is also possible. But we are not doing our analysis at that 1 minute level. I mean, high liquidity zone analysis. Because I stopped high liquidity zone analysis up to 5 minutes level. The reason why I stopped up to 5 minutes level is analyzing 1 minute data is a very costly effort, because software system needs a huge amount of system resources. It occupies so much of time for analyzing the 1 minute data, because 1 minute so many candles will be there. Okay, anyway, next question you will get clarity, because next question you asked about high liquidity zone. I asked you make a specific video on HLQ zones. You recommended to watch some videos. Yes, I recommended you to watch some videos because we have a playlist. Terminology of NeoStock, supply demand zone reports. All important videos I kept in this playlist. So far we have 24 videos in this playlist. In this playlist, one of the videos about HLQ zones. Yeah, this is the one. NeoStock high liquidity zone. This is just an overview. What is R underscore SZ? What is S underscore DZ? What is TCP underscore SZ or DZ? What is TCO underscore SZ? Their priorities. Just overview I have given in that. At least to feel some comfortness. But next videos, one of these videos, I explained with examples. If you read these headings, probably you will get clarity on profits given by high liquidity daily demand zones. This is dynamic entry buffer. This is volume related concept. HLQ demand zones on a bearish day. On a bearish day, how to trade HLQ demand or supply zones. Yes, In this I have explained the steps with examples. You would have referred this video 1st November 2023. Even one more zone, another one or two videos also. Opportunities after zone violation, important stock analysis, cost accessibility, how to fail ERC candles. Yeah, the 100 trailing stop loss. There is one more, maybe I didn't add in this, the 100 high liquidity zones. Recently, I think December 15th or 16th we completed. In that video also, I have explained about all the steps related to high liquidity zones. Anyway, one video is already available in this playlist. So definitely that would have helped you to understand. That is, once you have a high liquidity zone, how to make use of the high liquidity zone and identify your trading opportunities. So that because our high liquidity zones are having more success rate, at least in a month, at least a minimum of a 10 trades you will get successful trades, a minimum 10 successful trades. We get even more also, I'm saying at least a minimum assurance. Whatever the high liquidity zones we are generating, a minimum 10 successful trades in a month you will get. That itself gives you good money because 6.1% average ROA we are getting. That way we will get within a month 10 trades, you will get 60% return from our investment. If you would have invested 2 lakhs, 60% of the 2 lakhs. Probably you would have got 1 lakh 20 rupees. Or close to 1 lakh, minimum 1 lakh you will get in a month for 2 lakh investment. Say 50% return you will get with 10 successful trades a minimum. That is the advantage of our high liquidity zones. So how to make use of the high liquidity zone, how to fine tune, how to eliminate unnecessarily zones. There are high liquidity zones, we know that they will fail because we already explained when a zone will fail, all the scenarios we discussed. Those videos also will be available in this playlist. All the important videos I kept in this playlist. Maybe few I might have missed, but maximum I kept in this playlist. Few, why I am saying you missed, because second time, third time I repeated some concepts. Those things I didn't added in this list because already I have given explanation. Maybe I would have added them again, even second, third, so that you would have got more examples. But still, all those videos are available under in our in our YouTube channel. Or if you go through our Telegram channel, in the Telegram channel, every day I am providing with the topics, whatever the topics we discussed, the topics related, every day I am providing. Even if you go to Telegram, all the old links, you will find the right videos. That way you will be at least in a position to understand how to trade by making use of the high liquidity zone generated by our NeoStock software. But let me complete the remaining part of your question. But no clarity. Yes, if you would have looked into only this video, the overview video, NeoStock high liquidity, obviously you won't get clarity. In this video, this is only an overview about what is a high liquidity zone, what are the different types of high liquidity zones. The description only I have given overview. But how to trade by making use of the high liquidity zones, one of the videos I already shown you in this list, it is clearly explained. Probably you might have missed that particular video. That's why you didn't have the clarity. Okay, what is that? You just discussed the type of the high liquidity zones. Yes, in this video I just discussed only type of the high liquidity zones. But no real chart example. Yes, in this video there is no chart examples on how to identify zones. I don't want to hear your real question. Actually, what you want is, this is the one. I understand. Your intention is not about how to make use of the zones. So, what you want is, you don't want to depend on any software. If possible, make video with clarity how I should identify and mark high liquidity zone with real chart example. So basically you want to identify a high liquidity zone on your own. In most of the scenarios, it is impossible for the human to identify the high liquidity zones on your own. Most of the scenarios I am saying. There is a counter trend trade setup related high liquidity zones, the TCP underscore, those things you can identify. But their success rate is not the way how the real high liquidity zone is. Let me tell you, the real high liquidity zone is S underscore DZ and R underscore SZ. That is short names for support, demand zone, resistance, supply zone. They are your real high liquidity zones. Those zones give you the real success rate. Those zones are having higher success rate for the time frames daily and below. Those zones are having the higher success rate, at least 80% or above 80% success rate. With that intention, I developed the algorithm. To identify those zones, you need to analyze the data starting from the year 1994 until the date, until today's date. Is it practical for the human to analyze that much data? It is impossible. And the rules I have defined in all these zones, they are all software algorithm rules. They are not the normal demand and supply zone theory related rules. Demand and supply theory related rules are for identifying the zone. But identifying the zone that is really having high liquidity or not, for that check, so many conditions, algorithm, software algorithm related conditions I should explain to you. That means I should explain you all the software concepts, I should explain you all the algorithms I have developed, those secrets, everything I should explain to you. Then only you will be in a position to identify your high liquidity zone. That means you will write your own software algorithm, then accordingly you will be identifying the high liquidity zones. So that kind of effort I have to put. I should also make you exactly like how I am thinking while developing the software algorithms. I should make you like that. So to identify the high liquidity zones. But practically that is not possible. That is the reason why every day what I am doing, I am generating the stocks near demand and supply zones. In that, whatever the high liquidity zones on daily time frame and 75 minutes time frame, we are filtering them. For that, we developed a strategy, high liquidity zone trading strategy. See, high liquidity zones you cannot use just like that. You should also follow the other supply and demand zone algorithms. You should check the trend. You should check the their location, that is curve, and the price direction. And finally, you need to take your decision. Definitely, you will give you the, higher success rate, and also you can hold the stock for next few days depending on your trade type. That is your daily DIT trade or MIT trade or WIT trade, weekly income trade or monthly income trade. These concepts we'll be discussing in the next upcoming lessons. That way you can hold. They get success rate. That is one story. The other story is in high liquidity zones, especially daily and 75 minutes time frame, I have identified their success rate during the intraday is much higher than what I expected. And their return on the investment is also much higher than what I expected. Excuse me. The moment I expected all these things, okay, I developed an algorithm with an intention. After development and after I did the testing, I have seen something that is beyond my expectations, these high liquidity zones are giving, especially S underscore DZ and R underscore SZ. Some extent, the two more types they are also giving. It's not as expected as S underscore DZ or R underscore SZ high liquidity zones. But majority of the trades, successful trades are from S underscore DZ and R underscore SZ. Few successful trades also we have seen from other zones like TCP underscore and C underscore. So what is that identified from this high liquidity zone? During intraday, their success rate is high and their average ROI is 6.1%. If you have any doubt, the first 100 trades, first 100, you average the ROI, it gives you 6.18%, first 100. 1 to 100, just drag your mouse from 1 to 100 in the Excel sheet I posted in our group. It will show you 6.18. Even well before, from the 5th, 6th trade itself, I've been telling our average ROI is 6.1%. Because previous data I analyzed and I confirmed 6.1% is average ROI it is giving during the intraday. 6.1% average ROI means it is an extraordinary ROI. Most of the intraday traders, they satisfy if they get 1% and 2% is an extraordinary for them. 3% means it is an amazing for them. I'm talking about single trade. During the intraday, maybe you trade 3 stocks, 4 stocks, you may get more return. These calculations as per one future slot. I'm not bringing options into this. If you are using your option strategies, maybe you may get even more ROI also. That is a different story. But again, your risk factors will be a major problem, and especially when you are dealing with options. Risk point of view, I felt futures is much safer. So that's why I'm taking my calculations futures as a benchmark for my calculations point of view. But while trading, how you are trading futures or options, that is a different story. So 6.1 is an amazing. That's why what I did, I identified a strategy, a safest strategy. Even if you miss some trades, no problem. But the strategy should be safe. That's why I defined some ground rules and suggested you trade as per these rules. What is that you should know? You should know how to fine tune the zones. Probably if you would have already learned supply and demand zone price action courses, you know how to fine tune. But currently if you are learning supply and demand zone, within few days or maybe in another 15-20 days, you will be finishing all those topics and you will be also in a position to make use of the high liquidity zones, and then you will be in a position to start trading. For those especially who are currently learning supply and demand zone price action course, I have suggested you go for only paper trading. Don't go for real trading. Actually, we would have completed by this time because I don't know. It is not unnecessarily or really. I brought this price direction into the picture. Initially, I thought price direction should be explained in the third phase of the training program. But after lesson 12, I realized bringing price direction in second phase might be helpful to you, even though there is some delay in between for the presentation preparation point of view. Okay, I thought you will understand, you will able to understand the delay. Maximum 1 or 2 weeks, not more than that. But this brings a lot of additional advantages for you. Rather than I push this topic into the second phase of the, third phase of the training program. So I thought price direction I brought into the second phase. Because I don't want you people to miss the advantages the price direction is giving. At the same time, you will be eliminating all unnecessary false trades because of price direction related concept. Anyway, in the next, the last topic of the price direction, that is next lesson, you will understand all these concepts in detail. Probably tomorrow or day after tomorrow, I will be releasing that video. So you will really understand the real advantages after listening that video. Then you will understand why I brought this topic into phase 2 rather than pushing into the phase 3 training program. So, sorry, slightly deviated from our main discussion. Okay, so by seeing the 6.1% ROI, I decided to build a safe approach to trade and get the profits. See, here the question is, you buy today and getting the profit after 1 week, or you buy today and you are selling today itself and getting the same profit. It doesn't make any difference. What makes the difference? Your time. How much time you saved, that makes the difference. Because some people said, I can't trade during the intraday. I will buy today and I will sell after 1 week, or I will buy today and I will sell after 1 month. So some of the peoples are having, they have their own issues. So that's why they are not suggesting, they are not going for intraday trading. But actually these high liquidity zone trades are not intraday trades. They are short-term trades, but luckily we are getting return on the same day itself. So whatever the trading strategy I defined, it is really useful for the people who can buy today, and also we can sell today itself rather than waiting your trade for 1 week. Especially those who trade today and sell after 3 days, 4 days or 5 days, what those people can do? Maybe weekly one day only you do your intraday trade. I mean, it's not intraday trade, it is a high liquidity zone trade. Do your trading only 1 day, plan only 1 day. That day if the trade is triggered, you buy, that day itself you tell. Even if you wait for 1 week, you would have got the same return if it is not a high liquidity zone. 6.1% ROI probably you will get in 3 to 4 days time period. In another stock, you would have waited. What is the advantage of buying on the same day and selling on the same day? We are getting more and more profits than actually what you get. At least you get 3 to 4 times extra profit you are getting because of high liquidity zones. So that is the reason why I defined the strategy. We have two concepts here. One is a high liquidity zone and another one is high liquidity trade setup. And in 100 trades video, 100 HLQ zone trades video, I have explained these points, clearly explained. And also in that video, I explained all the steps also, once again. I put it in a notepad and I had drawn, I didn't remember, maybe it is December 15th or 16th or 14th, one of these videos you will be seeing. Please go through that video, all the steps, I kept it in a notepad and I have gone through one by one step. Because I don't want to repeat again and again, same things. Just go through the video because it is already there. So please make use of this opportunity and whatever the high liquidity zones I am publishing and use them. And if you are asking me, tell all the steps. Especially this is a dangerous statement. At present, you have to depend on the software. You don't have any other choice. Even if you build a skill, even if you develop your own software, still you have to depend on that software only. Even I myself cannot say it is S underscore DZ or R underscore SZ just like that. Sometimes I do a wild guess. It could be a high liquidity zone because of my experience, because I developed the algorithms at least. But to confirm really this is a high liquidity zone, because while fine tuning the zone, sometimes I used to say this is a high liquidity zones. That is not 100% statement. At least 80% my wild guess, because I developed the algorithms some idea is there in my mind. At least whatever I am saying, when I say this is a high liquidity zone, while fine tuning any zone, okay, this 15-minute zone, this is a high liquidity zone. When I say maybe 80 to 90% it is correct, but still 10% failure chances are there, right? To confirm that again, I have to depend on my software. Why I am able to tell this is a high liquidity zone? Because I already developed the software algorithms and I have algorithm rules are there in my mind. With that, I am trying to frame such kind of things in my mind, the software algorithm concepts, then I am trying to tell you. I clearly told you this software itself is a complicated software. Because if anybody did not attend our Q&A video, Q&A 1, question and answer 1 video, you think this software is like some scripts are available in the market, you will be thinking like that. In the first video, question and answer, first video clearly explained, I shown you how complex this software, how many lines of code I have written. So that's why, please understand. Explaining everything, whatever the question you are asking, everything, it is impossible to answer or it is impossible to provide solutions to you for what you are expecting. At some level, you need to compromise. And this is high liquidity zone is one area you have to compromise. You have to depend on this software. You cannot escape from this software. You have to depend. As long as I am providing the reports to you, definitely you will make use of the reports and get the money. What's wrong in getting the money by looking into these high liquidity zones? If it is not available, anyway you won't get, you do your own analysis, whatever the knowledge you have, accordingly you will do your analysis and you will get your money. But today high liquidity zones, my software is generating, make use of it. If you really don't like these high liquidity zones, leave it. You do your trading as per the way you like to trade, you go accordingly. Nobody is objected, right? But remember, explaining the algorithms is very, very difficult. To more than only supply and demand zone price action, more than 3 years dedicatedly, days and nights I worked only on supply and demand zone. But many concepts earlier I developed, they were reused in the supply and demand zone. Because earlier concepts are available, only supply and demand zone, after doing 3 years work, it is able to be completed. Otherwise, it would have taken maybe another 3 more years also. If I would not have reused already developed concepts in the existing software. When such a hard work I did and when I developed so many complicated algorithms, step by step, so many things, do you expect you to explain all those concepts in 5 minutes? The 3 years work, how can I explain in 5 minutes? It is impossible. I don't have that skill to explain. Even in 1 hour, even in 40, 50 hours, I can't explain that skill. 3 years work, I want you to explain. It takes 3 years time for me again to explain that concept. That's why I told you in the beginning, I should also make you an expert like you. I should also make you an expert like me. Hope you understand. So again, I am giving because such kind of questions again, some more people also ask in future. That's why what I am trying to say, high liquidity zone, especially S underscore DZ and R underscore SZ, these concepts, explaining these algorithms is not, first of all, algorithm I cannot explain because it is a software algorithm. These algorithms, whatever is identifying the zones, manually identifying those zones is 90% level, manually exploring those zones is impossible. Maybe 10% level we can explore. But 90% level exploring those zones are manually is very impossible. Sometimes you may do a wild guess. If your wild guess is wrong, again you will get an unsuccessful trade on that day. So that is the reason why just don't, because you people are learning at this stage, don't dependent on human efforts when a system is involved and when it is doing its work. We cannot compete with the systems. Please remember, systems are much faster. Whatever the work you do in 1 year, system will do the work in just 1 second or less than a second. I can say in microsecond it will finish that work. So we cannot compete with the systems. You may ask a question, system is developed by the human only. Yes, system is developed by the human, but that human is an expert in developing that particular system. But every human is not the expert like that particular person who developed that system, right? If you really want to develop this software, you should also build exactly the skill I am having on supply and demand zones. And you should also exactly develop the skill what I am having on Java programming. If both these criteria are met, definitely you will be able to develop the system exactly the same way. I am not saying developing the supply and demand zones requires a great skills. Only thing is you need to have the experience. But how many supply and demand zone experienced people, supply and demand zone experienced people will be having programming skills? I mean Java programming skills. Very few people. Those people definitely they can try and they can develop this kind of system. There is nothing great in developing any systems. But expecting what the system is doing the work, whatever the work the system is doing, expecting to do the work in manually is difficult. That point you need to understand. Never compare systems with the humans. Software development is different. After developing what the work computer is doing, that work a human cannot do. You have to understand that point. It is analyzing the data from the year 1994. Especially the daily data is there in my system from the year 1994. Intraday data is not available, that much data, but limited data, but okay, still considerable data is there. That is the reason why the software is, algorithms are analyzing the data from there. Lot of checks it will perform. By the time it reaches the current recent data, recent zone available data, by the time it performs so many checks, and all those checks based on that it will test the zone is really a high liquidity zone or not. So please understand, it is impossible for the human to identify the high liquidity zones. If you don't want to use the high liquidity zone generated by the software, leave this concept. Look for the other concepts. Because there is nothing wrong, there is nothing harm in leaving high liquidity zone concept, right? So hope you understand what I am trying to say. Okay, let me go to the third question. Can we get access to this site, or is it for private use? You mean, I think not the site, maybe you are asking about the software. Yeah, the software, see, for this question I already provided the answer in our Q&A session. So in this, go to this Q&A playlist. The first video, please go through. You get answers to your question. Please go through the Q&A first video. And next one is, can we use 15-minute, 5-minute, 3-minute intraday time frame? See the combinations, which time frames we should use. This topic I will be covering immediately after completing this next video. The next video is decision making table. After decision making table, I will be explaining from YIT, yearly income trade, until hourly income trade, HIT. So that will be stopped with 5 minutes. Instead of 3 minutes, 5 minutes is the last. But you went one step below. Below 5 minutes, we can trade, we can go for the income trades. But remember, you should be having a very good experience on supply and demand zone, price action. And also you should be having good experience on the stock market, prior experience, apart from using supply. In that case, you can even trade up to 1 minute level also. Most of the times the scalpers, they go for 1 minute level. Even they go for half minute or even 1/4 minute also if the data is available. Okay, let us limit to 1 minute because TradingView is having 1 minute data for at least basic level, whatever the packages, paid package services, it is available. I am not comfortable with this combination. I am answering only this, I am not getting into because next chapter we will be discussing about this in the training program. So I am limiting my discussion to only the question you have asked. I am not at all comfortable with this. 15 minutes to 5 minutes is okay. This is acceptable. But 5 minutes, 3 minutes, I don't. Because the reason is between the candles, at least I see a minimum of 3 candles, a maximum of 5 candles. 3 to 5 should be there. What is 3 to 5 candles? If 3 minutes, next combination should be at least 3 times, maximum 5 times. 3 times means 3 into 3. That is 9 minutes. You should get here 9 minutes. And next one, a minimum 3 or maximum 5. 9 into 3, how much? 27 minutes. If it is 27 minutes or 30 minutes, and this is 9 minutes or 10 minutes, and this is 3 minutes, it is acceptable. But see here, what is the difference between these two? You get a maximum 1 candle and half candle. That's it. 1.5 candle. 1.5 candle means 3 minutes, half of the 3. That is 4.5 minutes you will get. But a minimum, at least minimum 3 candles gap should be there between 2 time frames. Or a maximum 5 minutes gap should be there. So what is the best choice from 5 minutes? 1 minute is the best option. Because 1 minute to 5 minutes, 5 candles are there. And 5 minutes to 15 minutes, 3 candles are there. So that way you can go 15 minutes, 5 minutes and 1 minute combination you can see. That is for scalping. See, generally, what we do, instead of 5 minutes, you use 3 minutes. You have a 75 minutes, you have a 15 minutes, you have a 5 minutes. You have a 75 minutes, you have 15 minutes, and you have 3 minutes. 75, 15, 3. That combination, because 3 into 5, how much? 15 minutes. 15 into 5, how much? 75 minutes. So that combination we will use. So if you ask me, I don't prefer this combination. Maybe. I'm not saying people might be using, but I don't prefer this combination. Maybe few trades you may get success and few trades you will fail, because always I look for the combinations that give higher success rate. See, generally what we do, the 5 minutes, 3 minutes, 1 minute, they are all used for fine tuning point of view. Most of the times combinations are looking these 3 combinations, that is HTF, ITF and LTF combinations. These combinations are at landing stage. Once your landing stage is gone, once you get into the experience, you don't really look into these HTF, ITF and LTF combinations. Your way of trading is totally different. You never bother about 3 time frames. You may look for 5 time frames, 6 time frames. Use top-down analysis. Based on that, you will fine-tune the zones. After fine-tuning, you will identify the horizon where the actual move is there. See, Most important is not the time frame and identifying the zone. Most important is identifying the origin in that particular time frame. Our real origin is there or not. In the origin where the actual order flow is there, you have lot of pending orders will be there if you are able to identify the origins. If you think in that direction, if our mind thinks in that direction, always we get more successful trades. Finding the origin is more important. The biggest problem is always we stick our trades to Nifty or Bank Nifty. Most of the people will do, or indices, they limit. Because we are limiting ourselves to indices, what happens most of the times, we go and select some wrong zones, and that way we will get caught. Sometimes you get success, some you get failures. Anyway, I don't want to get into that discussion more deep because it is people's trials. But only comment I can tell you is always try to find the origin to get best success in the market. Next question, fifth question is please make video on IB candle. What I understood, IB means inside bar. Correct me if I am wrong. See, there are concepts like inside bar, outside bar, reversal bars. I've been using these concepts almost for the last 20 years. There is a concept called reversal bar. And many times that gave me a good success. It is not a supply demand zone concept. It is completely a candles. Even 20 years back, I didn't use candles. I used only bars, OHLC bars. So there is a powerful concept called reversal bar, but that people should know how to use that concept properly. By using that concept reversal bar, I have predicted the fall that happened in 2021, I think in the month of November. Let me open the Nifty. Let me go to the daily time frame. Here. October, not November, October. I have predicted this crash because see after that what happened to the market. And when this higher high is crossed, 29th November 22, that means more than a year, the market is below this all-time high. And even before, even there was a huge market reached up to 15,000 level. The reason how I predicted based on a concept called reversal bar. It is not a candlestick concept. It is bars, OHLC. That's it. OHLC we can represent using candle or even you can represent using bars also. Price bars. See here, instead of candle, I can use bars, bar charts. This is the way also we can identify. The advantage with candles is at least you have what is the candle body. Clearly you can distinguish that. But otherwise, what is this reversal bar? At all-time high, remember, focus on this point. When market is at all-time high, when you have a candle, previous candle and the recent candle, and the recent candle's is higher than the previous candle's high. Look into this candle. Is this candle high is higher than the previous candle high? Yes. And the recent candle's low is lower than the previous candle low. See here, recent candle low and previous candle low. And also recent candle's close is lower than the previous candle. some people also see even near to the close also. Near means a little above also will consider. But if you follow strict rule, very strict rule, recent candle low should be lower than the previous candle. So recent candle low is also less than the previous candle low. And when you have to check this scenario, when market is at all-time high, same thing you can check with candles also. Now let me change to candles. See, present candles high is higher than previous candles high, and present candles low is lower than the recent candles low. And the recent candles close is also lower than the previous candles close. That condition also. Recent candles close is also lower than the previous candles low, not previous candles close. Previous candles low. Low is recent candles low is less than previous candles low. Obviously, low of the candle is also less than the previous candles low. Such kind of pattern is called reversal bar, because previously people are not using the candles, they use the term bars, reversal bar. These are the bar charts, because this concept is developed before candles are getting familiarity in the market. Candles been using in the Japanese for several years, but popularity it get after some time, even though they are using. Even before that, these bar charts also got lot of familiarity in the market. When people started understanding Japanese candles are more powerful, slowly people started forget about these bar charts. Even I was using bar charts in my earlier career. Several years I used only bar charts rather than using candles. This bar is called reversal bar. What is this reversal bar indicates? Reversal bar indicates end of the bull market or end of the bear market, because this concept is about the bull market reversal bar concept. End of the bull market. What I mean is end of the bull market reversal bar concept. Whatever the rules I explained. So because this bar indicates, this bar satisfies the conditions, now it indicates end of the bull market, because before that, see, the market is a bull market. And after this reversal bar, you see, the market became a bear market. See how it went down. After that, it is recovered. That is a different story. But for some time, it is a bear market. Almost 1 year, the market is in bear. Why it happened? Because of this reversal bar. But many times we get false reversal bars. Many times we get false reversal bars. So how to identify false reversal bars? By using one more candle. So already we used two candles. Now see the next candle. If next candle lower low is there, when there is a lower low, it confirms the reversal bar. If there is no lower low, this is a false reversal bar. Whatever the reversal bar we got, it is a false. Now, the lower low, has it been confirmed? Yes. That means it is this reversal bar is a true reversal bar. See, after that market is crashed. And please remember, these reversal bars also you will get somewhere in the, during the swings also. But remember, this reversal bar at all-time high only gives you the exact picture. If it is not at the all-time high, this reversal bar is not having that much importance. Please remember. Sometimes what happens, a fake reversal bars also will come with confirmation. Sometimes. But they will be violated very soon. They will be violated very soon. In that scenario, what you have to do, you just, okay, let me change it to candles. You just draw a horizontal line like this. at the reversal bar. Go for your trades only after this horizontal line is prices go above that. That means a new again all-time high is created. Then only you can go for that. Sometimes fake reversal bars also. Let me show you an example that happened recently. See here, market is at all-time high. You have a candle, you have a higher high, you have a lower low. Your close is also close of the previous all-time high candle. Next day you got the confirmation, lower low you got the confirmation. But see what happened? There is no crash. So prices went above this horizontal line. That means whatever this reversal bar we got, it is a fake reversal bar. Within next 3-4 days, this pattern is broken. So the safest thing, because we never know, because the prices sometimes prices will come from here, then people will think, okay, market is moving up and they start buying, then again market will crash and go down. That's why until this line is broken, don't go for the trading. The moment this line is broken, this indicates the reversal bar is fake and you need not worry about this, whatever the signal it has given. So this is what you have to understand. But anyway, this is completely a different concept. So similarly, what he asked the question, IB. So I'm considering, I don't know what exactly, because he has given abbreviation. I'm considering this as a inside bar, the shortcut, because nowadays people are using different shortcuts. IB means inside bar, but his intention is inside bar or something else, I don't know. If it is inside bar candle, generally inside bar, there have been different concepts are developed. The actual concept, the olden days concept, it is like this. Let me show you an example, best example. Okay. Look into this bar. And the prices are closing inside this bar. See here, the next candle is within this bar, inside this bar. Even the next candle also inside this bar. Let me draw two horizontal lines. Generally, inside bars are called dangerous bars. The reason is inside bars most of the times they does not give clarity about the market direction. Why it is dangerous is it is having the ability to move the market either side. Maybe it is a bullish inside bar or bearish inside bar. I mean this bar, whatever this bar, we are calling this is inside bar because prices are moved within this entire range of the candle is within this zone. We never get clarity, prices will go up or prices will go down. That is the problem with the inside bar. So that is the reason why experts, what they suggested, don't take any trade, either one of these sides are broken. After that, you take a decision and then you estimate. This is as per inside bar strategy people adapted earlier. See, this candle is inside this candle, now it came out. Now you can take a decision and you can plan your trades, the everything. Then accordingly you can plan. But later on, people improvised this concept. I cannot say improvised. It is like, it's a competition. Market is a competition. Whoever wants to make some changes in any concept, because all these are all olden concepts. So basically, people wants to modernize concept. So to attract the new crowd. So that's why they are making some changes. So that way what people has done, they added, okay, instead of entire bar, if at least 1/4 of this bar is, or 1/3 of this bar is violated. See, for example, if this is violated 1/3 of the bar, so this inside bar is gone. Now you can take a trade as per this candles. Or 1/4 of the below it has gone, so this inside bar you can ignore and you can plan your trades based on these candles. That is the way people have given some exemptions to this. Like that, there are different variations as come. I'm not supporting any of these variations. First of all, I'm not really supporting much on these bars, but only one point I'm believing is this outside bar, if prices sometimes they struck up within this area. I mean, not outside, inside bar. Prices struck up within this inside bar sometimes. And the prices will move within this area. That danger is there. Because basically, if prices are struck up inside the inside bar, option sellers, they get a lot of profits. The reason is prices are moving within this narrow range inside within this bar area. In that case, what happens is your decay keep on eating your time decay. And options buyer keep losing their premium. And option sellers keep on eating your premium. That's why option sellers gets the. So if you are an option trader, when there is an inside bar, you should be very careful. I have seen many times, prices struck up within the inside bar several days and they move the prices within this area. That way, this is the only one point probably will be useful to option sellers so that they will be very careful, especially while trading. Whether maybe this could be a trap, who knows? The price is push it down, looks like this inside bar is broken out, but later again see prices for some days it struck up within this region. When the real break has come, here the real break has come. Now institutions created a new zone and pushed the prices down here. That way the prices has come down. Okay, except that I don't want to drag this topic much because most of us are supply and demand zone price action traders. We are not based on inside bars or outside bars. Just somebody asked a question, I just gave some clarification. But otherwise, I don't want to get into these topics at this point of time. So because I answered this question, please don't keep on putting questions not relevant to supply and demand zone price action concepts. Please. Next question, waiting for odd enhancer score video. Yes, this will be released after completing few more topics. You need to wait. Because in our odd enhancers, exponential moving average is also required to be completed. Rest of the odd enhancers we already completed in our phase 1 training program. So after completing and location also we have completed already in the second phase. Now only remaining is moving average. Moving average I will be completing because the next after I complete this decision making table, remaining lessons will be moving very fast because decision making table it took a lot of time. Sometimes I am thinking maybe I would have kept it in third phase itself because my research took a lot of time to finalize certain rules. But as I told you earlier, I felt having price direction phase 2 is more useful to you than pushing, even though 1 or 2 weeks are delayed, but still keeping this topic in phase 2 is only more relevant so that you people will start doing accurate analysis at this point of time. Now doing inaccurate analysis, again phase 3 making you correct your inaccuracy to accurate, I thought that is not really a right way of providing the training. So by thinking like that, I pushed that topic. So that's why it took a little longer than what I actually expected to uh, do my work in phase 2 training program. So once anyway, this one is completed. Which one? Decision making table is completed. I just let me finalize the presentation. After that, rest of the topics will go very fast. Maybe every day one video, or maybe every 2 days one video. That way we can complete. See, most of the time my time is taking for only the PPT preparation. PPT is completed. It's just only half an hour time or 40 minutes, depending on the length of that particular topic. Just video recording doesn't take. It's continuously giving explanation only. But the only problem is preparing the presentation. It takes sometimes 1 day, or sometimes even 2 days, sometimes even 3 days time it will take. Because there I don't want to compromise about the quality of the training. I mean quality of the presentation. But when it comes to price direction, it is not like that. Price direction, why it took more time is because this is a new topic. I need to finalize certain rules. There it took more time. Those rules you will be learning in the next lesson. That is decision making table. Okay, next question. Odd enhances you will be learning soon after completing moving averages. So probably in another 2 weeks time period, we will be getting into this topic. Please remember, this is not a great topic. Don't set your expectations like this is a great topic. The great topic is the next topic, that is odd enhancers. Uh, decision making table. That is a very important. Odd enhancers is just extra check, that's it. That's why I don't want for people who are learning going to first time by looking into this topic, do not believe that this is a great topic. According to me, this is an important topic, but not a high priority topic. If at all, if you feel the most high priority, that is your next video. Please remember. That's why I spend a lot of time on that. Next question is, why are you analyzing positional swing trading? Why are you not analyzing positional swing trading? Hope you will do videos selection. Actually, I will do. I love to analyze the positional swing related things. But remember, these opportunities you won't get every day. Like the opportunities we are getting every day based on the high liquidity zone trade setup we have identified. Definitely, I will do this soon after I complete second phase of the training program. I was waiting for that because all the people will be in a position to learn all the required concepts for the trading point of. And initially, I don't recommend the day trading related concepts for those people who learned concepts recently. So definitely, we will plan at least once in a week. We will plan, or if required, twice a week also we will plan in finding positional swing trades, because we have the software is available with us. Always we will be able to identify, because if you are finding the stocks near monthly zones or near weekly zones, we will be able to identify our swing trades. Even we can identify long-term trades also by finding the stocks near quarterly zones and half-yearly zones, because some stocks are listed. But the problem is, when you want to go for a long-term trades, the waiting period is also more. See, 6 months, a stock is there near 6 months zone. The stock will enter into the zone probably after 1 month only. Till next 1 month, every day in our list, the same stock will keep on displaying. I don't know how many of you observed. the stocks near 6 months time frames. For the last 1 month, same stock, the I think UBL or UPL, I don't remember. The same stock only keep on listing near supply zone, 6 months supply zone for the last 1 month. That is what happened. Your waiting time for the stocks to enter into our zone also will take a lot of time. Same thing happens for monthly also. Sometimes you may need to wait for more than a week or more than 2 weeks time until price enter into the zone, and until price exactly enter into your fine-tuned area. So that is the reason why, especially those who are planning for positional swing trades, you should have lot of patience. Your patience will be tested. Those who are having such a patience only will become a good successful positional and swing traders. So definitely we will plan, because anyway in next 15 days, maximum 15 or maybe one more week, if at all, if there is any delay, for completing our second phase of our training program. Actually, we are supposed to complete in December, but it's been delayed by more than 2 weeks as per our plan, maybe 2 or 3 weeks. And once we complete, I will be focusing on this, because I have to complete a top-down analysis. That is one important concept before we focus on this, focus on your question. Hope you understand. So because you are a swing trader, so please be patient until our course is completed. The second phase of the training program is completed. Definitely I love to focus on this. Which moving average you plot? We will discuss, because this topic is going to be discussed very soon, probably this week or early next week. So let us look into this moving average. I will explain in detail what is a moving average, how we calculate moving average things, at least a simple moving average, how we calculate. A basic idea you people should get. You don't require to calculate in the Excel sheets, but to give you an idea, once you know the formula, your way of understanding is also much better. And then we will focus, because we are supposed to use the 20-day moving average. The moving average I am using is 20-day moving average, and daily time frame it is a 20-day moving average. If I am showing you weekly chart, it is a 20-day moving average for weekly time frame. And below daily time frame, I don't use moving averages. Next question, can you explain how to set up EMA and a 50-day moving average? So you mean, anyway, we are going to discuss about 20-day moving average. Instead of 20 days, you just add 50 days. That's it. I will show you. Please wait for a week time. We will discuss this. Same question. Oh, same question. Sorry. Let me delete this. So I hope I addressed all these 10 questions. Okay. Still, if you are having any questions, if you feel I did not answer any of your question properly, or if you are not satisfied with any of my answers, if you feel more explanation is required, if you feel more explanation is required for any of my question, so that you get even better clarity, so please mention them in the comment box of this particular video. See, the topic is this video, but if you are asking the question in some other video, that doesn't make any relevance, because sometimes I am seeing some questions. The question is video training lesson 13, But you are asking about high liquidity zones in the training lesson. In training lesson 13 is about price direction. You have to ask a question about the price direction. Already one person asked a very good question about the price direction in that video. I already provided answer there itself. A separate video explanation is required because it is relevant to that particular video. So if anybody who is learning that video, if they go through that questions in that video, probably they will also get similar kind of doubt. They will get the answer in that particular under that question. But if your question is specific to some other video and asking your question in some other video, that doesn't make any meaning, proper meaning, right? So that's why try to put your question in the relevant videos, not irrelevant videos. Sometimes there is a delay in answering my question because, see, every day I can't spend so much time only for your purpose. I have to spend my time for myself, myself also. Sometimes I'm not feeling well. See, for example, last Friday onwards, I'm suffering with this viral fever and all. So that sometimes I'm busy with some other work. So I may not be in a position to answer your question immediately. There will be a delay. But still, definitely I will answer all your questions. Don't worry. If not possible to answer, I will separate Q&A video. I will try to address all your questions like how I am doing. Previously also I did the same. So be patient. All your questions you will get answers. Few questions I don't answer because it is totally irrelevant. It doesn't make any sense. And maybe because they want to, what to say, they want to add some funny comments. So they will add some comments. You have to ignore them, that's it. Nothing more. Nothing more to comment on them also. Otherwise, if your question is a relevant question, definitely I will provide your answers. If you are appreciating, definitely I will reply back. I may not be replying immediately because I'm not going through the comments every day. But whenever I see, definitely I will, at least if you appreciate, I will definitely, I will tell thanks. But there will be some delay sometimes. Please understand. So thank you for attending this Q&A session. Let us all meet again in the next video. Thank you.